Have you ever wondered if you should refinance your mortgage now? That's a question I get from clients all the time. I'm Stephen Cruz, mortgage broker with Paragon Mortgages and mymortgagebroker.com. And today I wanted to talk a little bit about that and what factors you should consider before you choose to refinance your mortgage. And I'll show you a little calculator that I use that's on my website that you can use and find out if it's worthwhile or not to refinance your mortgage. Okay. Let's get started. I'm going to share my screen and let's review some of your options and how everything goes. All right, so here's my screen. What I thought we could do is I'll just review two options why you would consider refinancing your mortgage. So the first option is to get a better interest rate. So if your mortgage is at a higher interest rate and there's interest rates that are lower today, then you want to see if it's worthwhile just to renew it early. So that's considered either an early renewal or a mortgage switch potentially. If you need some extra cash out, that's over here, getting cash out, then you're going to increase your mortgage and you could want to be paying off debt or improving your cash flow or buying something else. So that is the other option. You might want to renew and refinance your mortgage early. So let's take a look at those two factors. If you're refinancing your mortgage, what I would consider is looking at the penalty. So you want to see what that penalty is to get out of your current mortgage, how much the legal fees are, appraisal fees, and then how long is it going to take you to repay that mortgage. So if it's a switch, penalty is going to be the penalty comparing whether it's equity takeout or not. The penalty is going to be whatever it is. And I've talked about penalties in the past, so I'll put a link down in the description for calculating penalties. I also have a post that discusses penalties. Most of the big banks, they calculate their penalty quite onerously for the client versus some smaller lenders, monoline lenders. Their penalty calculation is much more favorable. Some credit unions can have a good calculation, some don't. It depends from situation to situation. So you have to look at your penalty and find out what it is. You can put it into my little calculator. So legal fees, when you switch your mortgage from one lender to another to get a better interest rate, there's typically no legal fees, typically no appraisal fee. Most times, if there are these fees, the lender will cover those for you. If you're staying with your own lender, they're not going to order an appraisal. There's not going to be any legal fees because you're not changing. So if you switch to another lender, the other lender will pay it. Typically, if you renew with your own, there's not. If you're getting cash out, there will be some legal fees because they have to discharge the existing mortgage and put on a new one. So there's a fee for that, and then typically an appraisal fee. This is kind of a range. It could be $300, could be $400, depending on where you are and how far away from major center you are, but fees on average are around that much. So if we want to calculate the penalty, let me just go to my website. So we're going to go to mymortgagebroker.com and then click on calculator. So let me just open up that website and we'll do that right now. Okay, so I have gone to my website right here, mymortgagebroker.com, click on calculators, and this will then take us to the calculator page. And what I want you to do is scroll down to the third calculator. This one here, should you refinance your mortgage? This one has the calculator that I'm talking about. The article that I've written that is just being produced right now and will be on my website today, that will also have this calculator. So I'll put a link to both of these here for you. So we click on this link and this will take us to a page that talks about why people refinance and talks a little bit about the penalties, etc. And I scroll down and the actual calculator is lower down on the page. I describe how to use it and what calculations to use, etc. So the first calculation I want to talk about is a client who doesn't want any new money. He's either going to switch his mortgage or renew with his own bank if they can get the same or better terms. This client has a mortgage of $300,000. The penalty for this client is, I believe it's $3,500. And the interest rate that they have is 3.59, and the new interest rate they're getting is 2.69. They have 24 months left on their mortgage, and so we keep these the same so that you can compare apples to apples. They have 25 years left on their mortgage, they've got 22 and a half years left on their mortgage. And if we set up a new mortgage, it's going to be the same. 22 and a half years would be the same amortization to switch. Yeah, so that's what that is. So we scroll down a little bit and the answer comes up. So what happens is that the $3,500 is just added on to the mortgage. If you stay with your own bank, they will typically not include that in your mortgage. They will have you pay it cash. If you switch to another bank, often they will include up to $3,000 of the costs, the penalty, into the new mortgage. So if you were to move it to another bank, in this case, you'd only pay $500 of the penalty. The rest would be added onto the mortgage. To compare apples to apples, what I've done is this calculator will add the whole penalty to the mortgage so that you can compare to make sure that you're saving money. So we scroll down and we see that this has a mortgage that's slightly higher because the penalty is included. The payment is lower because the payment difference is the same. We kept the amortization the same. So the payment is going to be reduced by $120, almost better for taking this lower interest rate. And so therefore, over the term, over the 22 months right here, 24 months, right, you're going to save $2,800, and that will mean at the end of the term, the mortgage balance will be slightly higher. So what I usually like to do is compare apples to apples. So I'm going to keep the payments the same. So I'm going to move this amortization down a little bit so until we get to a point where the payment is almost exactly the same. So I just have to go down a little bit. I can't necessarily make it exact, but we can make it similar. $2. So this payment is now $2 more. At 2.25 years, at 2.5, it's $12 less. So I think $2 is closer to, so we'll do that. $2. So the payment's $2 more. Is a very similar payment. At the end of the term, or so the end of 24 months, so that's what's remaining on this mortgage term, the end of 24 months, the balance, the savings is $2,600. So by keeping the payments the same and incorporating the penalty into the mortgage, this client, or you, if it's your calculations, will save $2,600 over keeping the mortgage for the remaining term, even though you have to pay this penalty. So let's see how long it takes to make it even. So if we reduce this, let's say to 10 months, so there's 10 months remaining, then you haven't covered the penalty. So let's try 12. This is how you would play with it yourself. And you can see that the balance is still higher. So we go to 16 maybe. Try that. $500. So we go to 18. So you can compare apples, so there's a savings. So 17 months. So basically 17 months, 16 months again. So it's between 16 and 17 months that's kind of the break-even point. So at 16 months, it's $500. It's still, you haven't quite recovered 500. At 17 months, you've recovered 700. So it's just in that 16.5 month mark that you've recovered your costs. And then you've got this lower interest rate for the remaining term. So the new term's likely going to be a 5-year term. So in this case, you can see that it is worthwhile to break the mortgage early, pay the penalty, and you're going to have a savings plus a lower interest rate over the next, well, if the break-even point is 17 months and you've got a 60-month term, so then it's going to be 33 more months of savings on top of what you have. So that's one situation. So let's look at another example, another situation, another client example. So in another example, I have a client who has a $450,000 mortgage. There's a $3,200 penalty. There's 18 months remaining on their term. The mortgage has a remaining amortization of 20 years, $1,100 legal fees, $350 in appraisal fee because we're going to refinance potentially. These are the potential costs, and their current mortgage balance is at 3.29. So for this client, they want another $50,000 to pay off some debt. So what I would do, what I was thinking here is we could use the calculator again to see if it's worthwhile for them to do this with a mortgage. So their priority is their cash flow. Their cash flow has changed, and they want to roll in some of this debt. Now, this is a vehicle loan and some credit cards and stuff, and their overall payments are around $1,500 for all of this stuff. And so let's use the calculator to see what we can do for this client. So we put in the mortgage balance, $450, and we're going to start with $450,000, and there's the penalty to pay off the mortgage was $3,200 plus legal fees plus the appraisal. So that's $4,450. That's going to be the cost. I don't want to put in the new money yet because I want to compare apples and apples to see if it's worthwhile if they were going to switch first to a lower interest rate, to see if it's worthwhile doing that. And then we're going to add the money to see their cash flow. So it's going to be kind of a two-stage process. So there's 18 months remaining on their amortization. So let's put this to 18 months. 18 months. And then their interest rate is 3.29%. So that's currently 3.29. And then the new interest rate, if they're going to set up a refinance, it's 2.94 to refinance. When we refinance the mortgage, the interest rates are slightly higher than if we're doing a purchase or a switch if the mortgage was insured, because refinances are no longer insurable. And the government made this change back in 2016, I believe. And so the interest rates charged by lenders on refinances is slightly higher than they are for a switch or an insured purchase or something like that. So it's slightly higher. If we look at the remaining amortization, there's 20 years remaining. So we'll leave this at 20 years for both. So now we have $450,000, the penalty, the existing rate, the new rate, the remaining amortization is the same, and the amortization is the same. And we can look and see that the payment is very similar. So, that's $450,000. So the payment is very similar within $31. Let's see if we can get it slightly closer by changing this amortization a little bit. $9.5, $15. So that's close. Oh, eight perfect, even better. So we can see that by adding the penalty to the mortgage, keeping the mortgage payments the same like we did the first time, the penalty is not recovered by the remaining 18 months of the amortization. So it's actually going to cost them $2,250 if they were going to refinance their mortgage, not get any new money, but just refinance their mortgage and try to get a lower rate. So that's not worth it. However, for these clients, they want to get another $50,000. So let's add $50,000 here, and they want to look at their cash flow. So it's more important for them to get a better cash flow because their life situation has changed. We can re-amortize this over 25 years. We can actually go over 30 years if they want to. The interest rate's slightly bigger if you go over a longer term, but over 25 years, we add to $50,000. So now we compare the existing mortgage with payments of $2,500. Now they would have more money, plus including the penalty, and the payment's going to be lower. So their payment's actually lower, $162 versus $162 a month, and less than what they had before. So not only are they saving the $160 per month on their overall mortgage payment, they no longer have that $1,500 in car loans and credit card debt. So this is a great little calculator to help you figure out if it's worthwhile for you to do a refinance or not. If you have a question and you wanted some advice from me, you can put your information in the middle here and press review the results with a mortgage professional, and I can connect with you to do that. You do not need to do that to get this answer. This answer will be there for you whether or not you put your name in there. So you don't have to connect with me if you don't want to. And the main number, the most important thing for you to do if you're calculating this is to figure out what the penalty is. So you can usually call your bank, ask them what it would be to pay out the mortgage early, and then they will provide you that number, and then you can see and calculate that for yourself. If you like the information in this video, then please press the subscribe button, press the little like button. That helps me out a lot. And if you have any questions, please feel free to go to my website and fill in the information here, or you can connect with me through my About page on my website. Thank you very much, and until next time, we'll talk to you again.